Good day, students. This will be the 2013 class test that I will be doing with you today, and I hope that you will enjoy this class or this video that I'll be doing. Class test 2013 for financial accounting 1. We have question 1 being out of 3 marks, just MCQ questions. And the first question says, in a close corporation, the liability of members for the debts of the CC is option 1 limited to the with provision by the CCs Act, and that becomes the correct answer. The first one, A. The capital, number 2, the capital that a member of a CC contribute is known as members contribution. Close corporation, that is called members contribution. Number 3 says a CC can have the following number of members, and we know that the close corporation can have between 1 to 10 members. Then that was question 1, so the answers is just A, B, C. Question 2 is out of 27 marks in this class test and is the very important question. Joe and Anne are members of the close corporation, which is Joe's Design CC. The following balances were reflected on the books of Joanne's Design CC on the 31st of December in the year 2010. We are given land and building with a cost of 700,000 rands, equipment, accumulated depreciation, retained earnings, and members' contribution. We are given their opening balances and take into account of the fact that the members' contribution is 620,000 rands. So now all the contributions of both members are already combined in that amount. So now we will need to split the two based on their members' interest. We are given general reserve, just also take into account of the fact that general reserve is taken into account on the 31st of December in the year 2010. So now note that it is a closing balance and is given to be 65,000 rands on the 31st of December in the year 2010. Then after we have bank account provisional tax of 95,000 rands, and the loans take into account of the fact that these loans are considered to be on the 31st of December 2010. That means the closing balance 31st of December 2010. Then after we have investments, we have profit before tax. Take into account that this profit is before tax 385,000 rands. It means we still have to take into account the taxation expense for the year. Then after we have interest that was paid on a loan from a member, Joe, 2,700, and we also have the interest on the investment, 7,800, and this interest on the investment is not a transaction between the members and the close corporation. Then after we have the interest on a loan that was given to a member, 1,015 rands. Then after we have salaries that we paid to members and salaries that was paid to another member Joe, 60,000 rands and 45,000 rands respectively, member N and Joe. So now we know that salaries and the salary and this interest will be recorded in a note on transaction with the members, because these transactions being interest on loan between the members and the CC, and the salaries of the members are transactions between the members and the close corporation. Then after now we come to the additional information where they say Joanne's Design CC also supplied the following additional information. Joe number 1, Joe and N share the interest in the CC in the ratio of 65% and 35%, or in the members' interest of 65% and 35%. And they further say that the members' contribution on the 1st of January 2010 is based on the same percentage, which tells us that the amount of 620,000 rands that we see in the trial balance must be shared in the ratio of 65% and 35%. So now when we share that, we have to split according to the members' interest. Then after we continue to number 2. Number 2 tells us that on the 1st of March 2010, which is the current year, the members increased their contribution by 80,000 rands. So now all the members increase. Remember, the members increase their capital contribution by 80,000 rands, of which out of that Joe contributed a delivery vehicle worth 52,000 rands, and the remainder was cash contribution or contributed by N. So now it means if we say 80,000 rands minus the 52,000 rands that was contributed by member Joe will give us the remainder of the cash being 28,000 rands, which is a member contribution by N. So now N contributed 28,000 rands and Joe contributed 52,000 rands out of the total of the 80,000 rands. Then after, we are again told that land and building was revalued to 850,000 rands on the 30th of November in the year 2010. And remember, there is a land and building in the trial balance, the land and building of 700,000 rands. So now if we say minus 850,000 rands, this will give us 150,000 rands of the amount that will be recorded under the revaluation. So we know that 150,000 rands will be recorded as a revaluation surplus. Then after, we continue to the next adjustment. It further tells us that no entry has or have been recorded as per yet regarding the revaluation. So now we have to account for that under the revaluation in the statement of changes in equity. Number 4 tells us that the income tax expense for the year amounted to 100,000 rands. Remember, in the trial balance, there was a profit before tax, the profit of 385,000 rands. Here was the profit. So now we need to subtract 100,000 rands of the tax so that we get to 285,000 rands as the profit after tax, and that profit will be recorded in the statement of changes in equity under the column of retained earnings. Then after, we have number 5, and number 5 says 45,000 rands is to be transferred to the general reserve account. 45,000 rands is to be transferred to the general reserve account. So now remember, I said that our assumption regarding general reserve is that the general reserve that you see in the trial balance as 65,000 rands is the general reserve at the end of the current year. So now if that is the general reserve at the end of the current year, it means the 45,000 rands was already taken into account. So now we just have to work in reverse to determine the opening balance regarding general reserve. However, we still have to record the 45,000 rands, reflecting that it was a general reserve or a transfer to general reserve during the current year. Then after, we have number 6, where we are told that a loan of 4,500 was made by CC to member N. And it further says she, remember, we are referring to the member here. Who is she? We are referring to the member N. She also repaid 2,500 of the loan during the year. So now there was a loan that was given to this member. So now it means 4,300 will be loan advance during the year. However, 2,500 will be a loan repayment because she, being N, paid back 2,500 out of the loan that she owed to the close corporation. Then after, we have the close corporation that paid 5,000 towards a loan from Joe during the year. So now it means the close corporation received a loan from member Joe, and there was a payment that was made by the CC during the year. So now this will be a repayment on a loan from member Joe, and there will not be any loan advance between a loan of Joe and the close corporation. Number 8 tells us that the members have authorized a distribution of 120,000 rands of the profit for the period to themselves. So now the members decided to distribute a portion of the profit to themselves. So now this will affect the retained earnings column in the statement of changes in equity, and it will have to be a negative because money is taken from the profit and it is distributed and paid direct to the members. Then after now, we are required to do the statement of changes in equity for the closed corporation. Then we are also required to do the following notes: a note on a loan from Joe, a note on a loan to, and transaction with members. And these three requirements are always very critical when it comes to the topic of closed corporation. And whenever a test comes and exam comes regarding closed corporation, always or most of the times these three will definitely be asked. So now let us continue by answering all that is required, starting with the statement of changes in equity for the closed corporation. So now I have already prepared the table for the statement of changes in equity, and your statement of changes in equity always have these columns. Therefore now we always start with the opening balance. Remember, opening balance regarding the members' contribution, we don't know that, so we have to go and calculate, because we are given the members' contribution as an amount of 620,000 rands combined. So now it means we have to say 620,000 rands term by 65%. And if we say term by 65%, that will give us 403,000 rands. 403,000 rands. Therefore now 403,000 rands will be the share of Joe. So now it means it will be the capital of Joe. It means Joe contributed 403 rands of capital. However, another share out of the 620,000 rands will be times by 35%, and that will give us an amount of 217,000 rands. And that will be the opening balance of the capital which was contributed by member N. So now that will be the opening balance of the capital contributed by member N. So now we can immediately go and record the opening balances of these two members. The first member being Joe, 403,000 rands, and the second member being N, 217,000 rands. So now these were the opening balances that we have to calculate using the members' interest. Then after we record the opening balance of the revaluation, and unfortunately there was no revaluation that was given from the trial balance. Here we don't see any revaluation from top to the bottom. There is no revaluation. Therefore now, meaning that revaluation had no opening balance. General reserve also does not have an opening balance, because I said please take into account of the fact that general reserve of 65,000 rands is the closing balance. So now it means we already know that 65,000 rands is the closing balance. We can just record under the general reserve closing balance 65,000 rands. Then after we look for the amount of the opening balance for retained earnings, and our retained earnings is an amount of 123,000 rands being an opening balance, and you can see that the date is on the 1st of January 2010 being the beginning of the accounting period. So now we record the 123,000 rands under the retained earnings, 123,000 rands, and that will calculate the total after we have taken into account the opening balance of the general reserve. So now I will not do the calculation as per yet. Then we go to the second part, and the second part is the profit for the period. So now let us check how much was the profit for the period on this exercise. So now we had our profit which was before tax, and we said that our profit is 385. We still had to subtract the 100,000 rands, and 100,000 rands was our tax expense here under number 4. That was the tax expense. So now we had to go and subtract this one here. so that we get 285,000 rands as our tax expense. So now let us record that 285,000 rands under the statement of changes in equity in the retained earnings as our profit for the year, 285,000 rands, and also under total it will be 285,000 rands. Then after we check if was there any additional capital that was contributed by the members during the year. And there was a capital that was contributed by the members during the year. The total of that capital contribution was 80,000 rands. Remember, this was 80,000 rands. And we were told that 52,000 rands of the worth of vehicle was contributed by member Joe. So now out of that, 52,000 rands was contributed by Joe, and we record that under the members' contribution. And we know that if we say 80,000 rands, just like calculating the contribution, if we say 80,000 rands minus 52,000 rands, which is the contribution made by Joe, it means 28,000 rands will be the contribution. We did this calculation before. 28,000 rands will be a contribution by member N, which was a cash contribution. And if you say 52,000 rands plus 28,000 rands, that should give you the amount of 80,000 rands. And the capital contribution only affects the total column. You don't record it anywhere except under the members' contribution. Then after you record it under the total. General reserve, there was a transfer of the amount to the general reserve, and that was adjustment or additional information number 5. They were told that 45,000 rands is to be transferred to the general reserve. So now we must transfer an amount from the retained earnings to the general reserve account. So now it will be recorded as 45,000 rands general reserve, and it will be negative 45,000 rands from the retained earnings. We just transfer a portion of the amount so that that amount will not be distributable to the members. So now it means if we have accounted for the closing balance being 65,000 rands, and we have accounted again for the general reserve during the year, it means obviously there must be an opening balance. So now the opening balance, when we calculate that on reverse, will give us 20,000 rands. How do we get 20,000 rands? You say 65,000 rands minus 45,000 rands, you get 20,000 rands. So that when you say 20,000 rands plus 45,000 rands, you must get the closing balance of 65,000 rands. So now our opening balance for general reserve is 20,000 rands. Therefore, now that means we can be able to record the total under the opening balance as 763,000 rands. So now we continue and record the revaluation surplus. And there was a revaluation of land and building because we were told under the second adjustment, which was adjustment number 2, which is bit mixed with adjustment number 3. It's mixed with adjustment number 2, where we were told that land and building was revalued at 850,000 rands. And we said that to calculate the revaluation, we'll have to know how much is the land. And we said that the land given from the trial balance is an amount of 700,000 rands. So now if we say 700,000 rands minus 850,000 rands being the revalued value of the land, that will give us 150,000 rands. Remember, 750,000 rands is the value of the land on the beginning or in the beginning of the year, 700,000 rands. So now 700,000 rands we say minus 850,000 rands, which is the revalued amount of the land during the year, which is the one under adjustment number 2. And number 2, that give us an amount of 150,000 rands of the revaluation of property. So now we record that 150,000 rands under only the revaluation column. Then we say 150,000 rands. Then after revaluation, it does not affect any other column, but it will just be recorded under the total column. Then after we have the distribution of profit, and I think there was a portion of the profit that was distributed to members. It says the members have authorized the distribution of 120,000 rands of the profit for the period to themselves. So now this is the total of 120,000 rands that must be distributed to the members, and it will be taken out of the retained earnings column because we are taking portion of the profit, we distribute that to the members. Therefore now it reduces the cash that was to be retained by the business. Then after we have recorded all the entries that are required in the statement of changes in equity, and we can then after record the totals, or just give the totals. And if you say 403,000 plus 52,000, that should give you 455,000 rands, and 217,000 plus 28,000, that will be 245,000 rands. Then the total of the revaluation will be 150,000 rands, and the retained earnings will be an amount of 243,000 rands, and the total of the total will be 1,158,000 rands. So now that will be the statement of changes in equity for this closed corporation, and that statement is complete and it balances and all the amount are accurate and correct. Then after we can do the second, third, and the fourth requirement being 2.2.1 and 2.2.2 and 2.2.3. A loan from a member Joe, a loan to a member, and transaction with members. So now we go straight to the recording of the notes. So now I've already done the template for you beforehand so that we waste no time but focus on the key elements in doing all this calculation. So now I told you that the loans are the closing balance, so that we are clear with everything. So now we do have the loan balances, which is a loan that was from member Joe, 27,000 rands. Here is a loan from member Joe of 27,000 rands. So now we record that as a closing balance. Then it will be 27,000 rands. Then after we have to record again another loan, the closing balance of the second loan. And the second loan, as I said, that it is a closing balance, is a loan to member N, 10,510 rands. So now I must record that loan 10,510 rand, 10,510 rand. So now let me look for the transactions that affected the loan accounts, repayment or the loan advance during the year. And I think that was adjustment number 6 that had something to do with the repayments of the loan and the advancement of the loan during the year. And adjustment number 6 told us that a loan of 4,300 was made by the CC to member N. That means the closed corporation gave a loan to member N during the year. So now that will be a loan advance of 4,300 rands. So now let me record that 4,300 rands immediately. So we record that 4,300, which is a loan that was given by the closed corporation to member N. Okay, 4,300 is to member N. Then we go to member N, we record 4,300 rands. We just change the color. Loan advance 4,300 rands. Then after we check the second part of the loan, I think there was a transaction that said there was a repayment. And it says she also paid 2,500 of the loan during the year. So now that will be a repayment. Remember, a repayment reduces the loan. So now for us to reduce the loan, we have to record this as negative, obviously. So now we have a loan advance during the year, which is a loan that was given again to earn during the year, and he also repaid 2,500. Therefore, now from there we can be able to calculate the opening balance that we don't know. So now we have to say 10,000 plus 2,500 minus 4,300. Remember, when we work backwards, we have to change the signs. So now, although 2.5 is negative, we have to say plus. And although 4,300 is positive, we have to say minus. Therefore, now that will give us the opening balance as 8,700 rands, which is a loan before the advance of 4.3 was taken into account, and a loan balance before the repayment of 2.5 thousand was taken into consideration. So now we go to the second part of the transaction that tells us about a loan that was paid by the close corporation towards a loan from N. Then it says the CC paid 5,000 rands. So now this is a payment of the loan by the close corporation. Obviously, the close corporation pays money because it was a loan which was from a member. So the close corporation has to pay back the loan. So now in this case, we record this under the repayment. Therefore, it will have to be negative because a repayment has to reduce the loan. So now we record that as negative 5,000 rands, which was a repayment of the loan by the close corporation, as the transaction clearly stated that a repayment of 5,000 towards a loan from Joe during the year. So now we have recorded that as 5,000, and there was no any other transaction that took place on this loan from a member Joe. Therefore, now there is no loan advance. Then you have to calculate now the opening balance, where we have to say we are looking for the balance before the 5,000 was repaid, because we know that after the 5,000 was paid, then the balance of the loan became 27,000 rands. But before 5,000 was deducted, being a repayment, it obviously means that the loan balance is 32,000 rands, or the loan opening balance was 32,000 rands. So now, whenever you are given a closing balance and you have to derive or determine the opening balance, also when you go down, you have to get the same closing balance. Just like saying 32,000 rands minus 5,000, we get the same 27,000 rands. And again, in the second one, on a loan to a member, which is member N, if we say 8,700 plus 4,300 minus 2,500, we get the same 10,510 rands. So now make sure that you prove that, in case you might have done some mistakes in your calculations. So now let us continue to the last part of the transaction, which is a transaction or interaction with members, which are only the transaction that affected the members and the close corporation beside the loan. So now from the trial balance, we were given some transactions that were between the members and the close corporation. Remember now, this transaction are mostly the salaries, the interest on the loans. And on the transaction with members, we only focus on the incomes and the expenses. Please take note of that. We only take into account the incomes and the expenses. So that tells you that the loan will not appear in a transaction with members. The loan will not appear under transaction with members, because a loan can either be an asset if it's a loan to, or a liability if it is a loan from. Therefore, now an asset and a liability must not be recorded under transaction with members. We only record incomes and expenses that are between the close corporation and the members. So now let us check in the trial balance if are there any incomes and any expenses, being the transactions that are between the close corporation and the members. And surely we do have those transactions. There was a transaction being an interest paid on a loan from a member. Remember, an interest in this case, which is paid on a loan, and the close corporation says an interest paid. So now the minute it is a payment, that indicate that this is an expense from the close corporation perspective, because the close corporation is making a payment. This indicate outflow of cash, so now it has to be recorded as negative. Then after, we have another interest received on a loan to a member. So now the minute the close corporation receives the loan, that means this becomes income. Therefore now it will be recorded as without brackets in the note, therefore now indicating the inflow of cash. Then after, we had salaries that were paid, and the minute the close corporation make the payment, that means it indicate outflow of cash. Therefore now these two amounts will be recorded as negative. Now there was another interest. Look at this interest. The interest on investment, interest received on the investment. Which investment is this one? It could be any other investment. It could be just investment to Old Mutual. It could be investment to Sanlam. It could be investment to any other company. But this investment was not an investment on a loan given to a member. Therefore now that will not be recorded in the transaction with the members. So now we only take into account, remember, incomes and expenses that are between the members and the close corporation. So now let us begin recording those ones. So now we have interest which was paid on a loan from. So now the close corporation is making the payment. And if the close corporation is making the payment, it means now we have to record this as an expense. And if it is an expense, it must indicate outflow of cash. So now interest that was paid on a loan, 2,700 rands. There is the interest paid, that must be 2,700 rands, and it must be in brackets indicating outflow of cash. Then under total, where there's a total column, please also write that. But some exercises, they don't take into account the total column. Then after, we go again and check which other entry that affected the members and the close corporation. Then the next one is the interest that was received on a loan to a member. Interest received 1,000, interest received 1,015 rand. So now that will be recorded as inflow of cash. That means without brackets. So now that will be interest received from a member and 1,015 rand, 1,015 rands. Remember, the minute it is without brackets, it indicates inflow of cash to the close corporation, because the close corporation is receiving. So now whenever the close corporation receives, we record an amount without brackets indicating inflow of cash. However, whenever the close corporation makes the payment in terms of being an expense to a member, then that will have to be indicated as with brackets as outflow of cash. Then now we record only the next two entries being salaries that were paid by the close corporation to the members, 45,000 rands and 60,000 rands. And these two amounts will have to be recorded with brackets indicating the outflow of cash. Then this will be 60,000 rands negative and 45,000 rands negative, indicating outflow of cash, money going out of the close corporation, and the total will be 105,000 rands. Then we also write under the total the same amount. So now with that, guys, I have just completed this exercise. Let us confirm if there are no other requirements that we had that we did not answer. So now with that, we have completely completed this exercise, and I would like to thank you for that. It was just a very, very short exercise. So now I will just say thank you on my side. Hope you have enjoyed this class. Thanks, guys.